Volatility. Today's market is volatile. These last few months have highlighted the uncertainty in the market and the overall economy for many investors. We've seen massive sell-offs in certain sectors, such as software, seen sell-offs across the board, across some of the top companies in the world. Communication services, again, some of these Mag 7 and top companies have also seen sell-offs. And when companies have these drastic swings in share price, that creates opportunities for investors. I buy my core ETF holdings every week, regardless of the share price. I don't even look at it most weeks. But when I'm buying individual stocks, I try to be a little more selective, looking at buying good quality companies at a fair price. And this often means taking advantage of dips and swings in share price. So this month, in accordance with that strategy, I'm adding to 2 positions in my portfolio. One which I recently opened and one which I've held in my portfolio for about a year. I believe they both offer durable multi-year growth and they are at attractive entry points. And these 2 stocks are Uber and Mercardo Libre. So let's take a look at each stock. What do I like about the company? What are the concerns about the company? And what do the numbers actually say about where the company is headed? Let's start with Uber. Now, Uber is a company I first added to in this dip in April of last year in 2025 when the share price was in the mid-60s. At that time, the stock price had been beaten down over concerns about AV and disrupting the entire business model and business of Uber. However, Uber kept having good returns, good generation of revenue, and so the stock price, as you can see, saw pretty quick returns over those next couple months. However, Uber's again been beaten down, and in my opinion, it's due to many of the same concerns that dropped the stock price and held it flat for such a long time in the first place. And in my opinion, this creates another buying opportunity in Uber. And the numbers for Uber back this up. So let's get into their most recent earnings report. This was released early in February of this year. Now, Uber's results for their 4th quarter and for full year 2025 show great top-line expansion and overall growth in their business. Now, looking at total trips for the last quarter, which is the amount of rides that Uber provided, we saw that grew 22% year over year. They're giving 3.8 billion rides just last quarter. And these 3.8 billion rides were converted into gross bookings of $54.1 billion, also a 22% increase year over year. This growing platform and user usage saw revenue grow to over $14.4 billion. And this increased revenue was also converted into free cash flow of over $2.8 billion in the last quarter of 2025 alone. This is an increase of free cash flow of 65% year over year. Uber's growth was not just limited to their ride offerings. The delivery portion of Uber, often known as Uber Eats, generated over $25 billion in gross bookings. Now, that is the amount of money being used on Uber Eats purchases on the platform. This demonstrates a 26% year-over-year growth in the same quarter for the delivery aspect of Uber's business. And this increase in the delivery bookings led to a 30% growth in the delivery revenue for Uber Eats. In other words, Uber is not just the #1 rideshare platform in the world. They are a diversified company expanding the sectors of their business and growing those sectors rapidly. Discussion about Uber always gets back to fears about disruptions from autonomous vehicles or AVs. And this can be seen, Uber addresses this upfront in their earnings report, mentioning multiple times their focus on becoming a leader in the AV future and being the #1 facilitator for AV trips in the world. And the concern is, if cars can just drive themselves, there'll be no more need for Uber drivers and no more need for Uber in general. And that makes sense, right? Not in my opinion. Current Uber and Waymo partnerships and partnerships with other AV companies show that Uber can successfully offer AV services on their platform. I believe this part of the business, the AVs, will only continue to expand. And so does Uber's CEO and Uber's team. If we ever get to a point where AVs are $30,000 and people are buying them to rent out, to give rides, kind of like an Airbnb, I believe that Uber will be the leading platform for these offerings. Uber's desire to become the leading transportation service provider can be seen in some of their recent partnerships and acquisitions. Just this past week, Uber acquired Spot Hero, a parking services company. This expands Uber's reach to those people who are driving their own cars and creates another way for Uber to get those drivers and those customers onto their platform. They are even partnering with some companies to offer air taxi services. I don't think we're anywhere near air taxis generating meaningful revenue or profits for Uber. But what I do think that these partnerships show is that Uber is the number one platform for these companies if they want to reach the most amount of consumers. Now, Uber is certainly not without risk, but rather than simply being a rideshare company inevitably displaced by AVs, I believe the Uber company when they say that they have a clear path to becoming the largest facilitator of AV trips in the world. Revenue and bookings grew over 20% year over year, and with Uber expanding even more quickly in their delivery and other aspects of their business, Uber is becoming a diversified platform and the leader in transportation service offerings. I believe Uber is positioned to be a clear winner regardless of AV development in the future. And that's why I'm adding to my Uber position this month. Now, let's get into the second stock I'm buying in March of 2026, Mercardo Libre, ticker MELI. Read one article, watch one video about Mercado Libre, and you'll hear it described as the Amazon of Latin America. And while that might be the closest comparison, that picture is incomplete. Mercado Libre is both the leading e-commerce platform in Latin and South America and a fast-growing fintech platform. Now, Mercado Libre operates across much of Latin and South America, but they are primarily focused in Argentina, Brazil, and Mexico. Wherever they operate, they are often the leading e-commerce marketplace, and they offer a wide variety of products from groceries to clothing to electronics, very similar to an Amazon marketplace. However, Mercado Pago, the fintech aspect of the Mercado Libre business, is arguably a more powerful growth engine. Mercado Pago offers a wide variety of digital banking and online financial transaction services. They offer customers digital wallets, payment processing, both for their own company and for other e-commerce platforms, similar to a PayPal. They offer credit and debit cards to consumers, and this includes offering consumer loans and consumer credit lines. And they even have merchant lending for those merchants on their Mercado Libre marketplace. This aspect of the business is really important for a couple of reasons. First, many customers in the regions that Mercado Libre serves are underbanked in that they don't have the same access to digital payments that many consumers in America do. As Mercado Pago increases digital payment adoption by consumers, Mercado Pago itself grows. But many of those transactions will also take place and many of those purchases will also be made on the Mercado Libre marketplace, the number one e-commerce marketplace, again, in many of these regions. That creates this flywheel. As the fintech aspect of Mercado Libre grows, and as they generate more consumers on their platform, this creates more marketplace transactions, generating more revenue for both the fintech and the e-commerce side of Mercado Libre's business. Their recent earnings show this rapid growth. So first, just looking at some highlights from their recent financial presentation and financial report. The first number that jumps off the page to me here is this 90%, I'll say that again, 90% year over year growth in their credit portfolio offering. Mercado Libre also saw a 43% year over year growth on the amount of items sold on their platform. This is that e-commerce aspect of their business. So the Mercado Pago aspect is growing at 90%, and at the same time, the e-commerce platform is selling 43% more products. Mercado Libre also grew their unique active buyers at 24% year over year, a 16 million user increase. Buyers on their platform are purchasing more product. Mercado Libre also reported over 15% year over year growth in the amount of items sold per unique active buyer. In other words, Mercado Libre is adding more users to their platform and all of their users are buying more products. And again, this is in addition to massive growth in their fintech. So Mercado Libre saw great growth in their top line revenue, massive increase to the fintech part of their business, and overall growth in consumers and products purchased by consumer on their e-commerce platform. But their share price dipped over 10% after earnings. And this was due in large part to lackluster earnings per share growth. In other words, while Mercado Libre was generating more revenue at over 40% year over year, they weren't converting that same amount of revenue into earnings and free cash flow. Now, the majority of this reduced free cash flow and tampered earnings stem from two reasons. First, Mercado Libre spent a lot of capital expenditure growing out the shipping part of their business. This meant expanding same-day shipping offerings, free shipping offerings, and cross-border shipping offerings across countries in the regions that they serve. And we can see this really increased the amount of same-day shipping that they could offer to their buyers. And this expansion will, in my opinion, better position the company for increased growth in the long term. By providing a better shipping experience, they're able to retain users and get those users to purchase more products on their platform, something we saw reflected in their numbers from this year. The other expenditure driving down EPS was the expansion of the credit business for Mercado Pago. However, this segment, as I discussed before, I think has the ability to really compound the growth of Mercado Libre. The credit segment nearly doubled year over year. And as more people are provided access to credit, and as more people are provided access to digital payments, those digital payments and that credit will be used to purchase products on Mercado Libre's e-commerce platform. So it's possible that Mercado Libre could continue to see this recent dip down in share price. And if that happens, I will continue to buy. Mercado Libre was a company that I've watched for a while, but it didn't actually open a position until this 10% sell-off post-earnings. And unlike a hedge fund, I don't have to be as concerned with 3, 6, or 12-month free cash flow returns and share price return. Mercado Libre is investing in the long-term growth and long-term profitability of their company. And I believe they're laying the foundation for long-term success of their company. Given this recent pullback, despite 40% year-over-year growth, nearly doubling of their credit offerings and expansion of the fintech platform, and their continued execution. I mean, this is a company that has grown at 30% or more for 22 consecutive quarters. For all those reasons, I plan to continue to add to my Mercado Libre position, regardless of short-term volatility in the share price moving forward. Both Uber and Mercado Libre share several characteristics. They're platform-based business models, they have strong top-line revenue growth, and they're expanding ecosystems into new sectors that are rapidly increasing growth. These are not risk-free stocks by any means, but the volatility that comes with these stocks can create opportunities. In March of 2026, I'll be allocating capital to both Mercado Libre and Uber. As always, this fits within my broader portfolio, which is anchored around core ETF positions and diversified holdings. So if you're analyzing any of these companies, I'm interested in your perspective. Are you buying the dip? Are you waiting for further weakness in the company? Or are you looking elsewhere in this volatile market? Thanks for watching. I'll see you next time. And as always, please leave a like, subscribe. It means a lot. Thank you guys.